Okay guys, welcome back to another video. The purpose of today's video is that we are going to run through the harmonic alternative bat pattern. So head over to my website ottrades.com, click on the patterns drop down tab here, and we've got a list of all of the advanced patterns and all of the harmonic patterns. Under each of these tabs we'll have a video like this explaining how to identify these patterns and how to set up the trading opportunities and how to manage those trades as well. So also on my website we've got other free educational content and details of indicators and candlesticks, as well as videos, free stuff, and obviously OT software to help you identify all of these patterns. So harmonic bat pattern, let's get this started then. So to begin with, like all advanced and harmonic patterns, we begin with the initial price swing. This can be either bullish or bearish. The initial price swing will determine the ultimate reversal that you're going to be looking for at the end of the pattern. So at that D point, you're going to be looking for a reversal in the same direction as this initial price swing. So our initial price swing is from the X to A point. This isn't determined by any Fibonacci ratios. This is purely a push to the upside or downside. This is our initial price movement before we look for Fibonacci retracements or extensions to form these patterns. So the first point to be constrained by Fibonacci ratios is the B point. So the market forms a B point on this harmonic alternative bat. This one is. Forms a B point by fulfilling a precise 382 retracement of the XA leg. Now, in terms of precise, we don't mean that it hits the 382 retracement of X to A exactly. By precise, I mean it falls closer to the 382 than the 50% level. I hope that makes sense. So here we've got halfway between the 50% level and that 382 level. Exactly halfway between those 2 points is the 44.1%. So if the retracement is 1 pip less than 44.1%, then it is treated as 382. Therefore, it's a precise 382 retracement. If it's 1 pip more than 44.1%, it's treated as 50%, and the pattern is invalidated. So here we have on this Fibonacci retracement tool all of the key Fibonacci levels. Now you could argue there's some ones that have been left out, but these are the main Fibonacci levels that we use in trading. So every time we're on about a precise 382, a precise 50%, precise 618, and so on and so forth, we're looking for market to input a price which is closer to our precise say, for example, 50% level than it is to the previous or the next Fibonacci retracement level. So here, if it's a 50%, precise 50%, we're looking for it to fall 1 pip closer to 50% than 382, and 1 pip closer to 50% than 618. If it extends past 1 pip, past halfway between these two, then it's then classed as a 618. That's what I mean as precise. So precise 382, obviously we need price to at least hit that 382 because there's no other Fibonacci level above this. You could again argue that the 23.6, I believe is another Fibonacci level. I'm not going to use that here because I've never used that in my entire life. I've never seen anyone else use that Fibonacci level. So here we're going to say the 382 is the minimum Fibonacci level in our retracement tool. So price has to extend to at least the 382 level, and it has to fall 1 pip above that 44.1% level, which is halfway to our 50%. So essentially, price has got to come within this level here. Now I'll put that 44.1% on. Not a bad guess with our green box there. So price has to fall within this range here in order for this to be a precise 382 retracement of the X to A leg. So precise 382 retracement, just put it in the middle here of that area, and that's going to form our B point. So I hope that makes sense. So if we just make that B here. Now for our C point. The C point is valid if it touches at least 382 retracement of A to B and does not exceed the A point or 100% retracement. So we're moving on from our X to A leg, we're moving from an A to B retracement, A to B. Let's remove that 44.1. Okay, so price now has to fall within this range here. So quite a broad range of fib levels that it can fall between. So price has to hit a minimum of 382. Just get this tool lined up here. So price has to at least hit this 382 level here, at least 382, and cannot exceed A or 100% retracement of that A to B leg. So at least 38.2% retracement or 0.382 Fibonacci level, and cannot exceed A. Now, the wick of a candle can exceed 382. It can then come back down and close below this 382 level. So long as the wick has exceeded the 382 point, then price is still valid. However, up here, because price is the factor here, so the wick can exceed here, that is immediately an invalidation. The wick cannot exceed the A point. Even if the wick exceeds it and the price comes back down to close below it, that is an invalid pattern because price has spiked above this A point. So the pattern is no longer valid. It can do it down here, but it can't do it here. So let's just call this, let's just bring this up to the 786 retracement level, just for the example here. So this C point can fall anywhere within that green box. And let's just label this up as our C point. Okay. Now finally, our D point. This is the most complex part of these harmonic patterns. So the D point is no longer a single point like we have in our advanced patterns. In harmonic patterns, they're made up of, apart from the shark and alternative shark, in harmonic patterns, they're made up of a potential reversal zones. This is 3 separate Fibonacci extensions or retracement levels that form a zone where you look for a reversal to start to happen. So the potential reversal zone is calculated as a combination of the 113 of XA, the 2 AB equals CD movement, and then finally it's defined by the an extension of B to C depending on where that C point has landed. So our C point was a precise 618. Again, this precise means that it's 1 pip closer to this 618 than it is to 50, or in this case 70.7%. And again, 1 pip closer to 70.7 than it is to 618 or 78.6, and so on and so forth. That's what I mean by precise here. So to get started then, it's calculated as a combination of the 113 extension of the X to A leg. So let's do this first. So we've gone from X up to A. This is our extension tool. And the 113 is already on there for us. So this is going to be our first level of the PRZ. This is our first level of that PRZ, potential reversal zone. Just trying to get this straight. There. So that 113 of the X to A legs, or 113 extension, all that means is 113% move of that X to A leg. Hope that makes sense. So that's our first part of our potential reversal zone, this line here. So our next part is a 2 or 200% move of A to B equals C to D. So the same distance as 200% of the A to B leg, but this should be copied across and measured from the C point. So this is as follows. So A to B, we've got that 113 on there from the last time we used this. So let's get rid of that and put 200%. So all this means is it's 200% of that A to B move. So it's essentially 2 of these put together, yeah? So as you can see here, 2 of those put together goes down to that 200% level. That makes sense. So 200% of A to B, and now this has to be drawn from the C point, which is here. So our C point lines up with the top of that retracement level. Let's just make that a bit higher up, I think. There. So C point forms the top of this retracement level, which is technically the A point. Now we've just dragged this line, we've just dragged down to here. So we've got the start point here and the finish point here. And 200% of that move forms here. So this is the second part of our potential reversal zone. So there's our second point of our potential reversal zone. Now if you can remember, our C point reversal formed at a precise, 786, sorry, I said it was 618. Formed at a precise 786 retracement of A to B. Now again, precise meaning it's 1 pip higher than halfway and 1 pip higher, 1 pip lower than halfway to the 886. So precise 786. So because our C point is a precise 786 of A to B, depending on where your C point forms, just find this level. So ours is a precise C point of that 786 of A to B. So we're looking for a 2618 retracement extension, of the B to C leg. So all this means is get our extension tool out and go from the B to C leg, so C down to B, back up to C, back up to C here. And it was a 2618, so let's remove the 200%. Have we got 2618 on here? Nope. 2618. Oh, I didn't tick it. So 2618 forms at this point here. Copy this down. So that is our third point of our potential reversal zone. Now, if it was a precise 886, we'd look at the 224, and again, if it was a precise 618, we'd look at the 314, and so on and so forth. That's going to change depending on where your C point forms in relation to A to B. None of these levels should extend past 1272 of X to A. Now, our original point was 113 of X to A, and our two other points have formed above this. So we know the 1272 of X to A is going to be somewhere below this 113. So we know our PRZ is valid. So none of these points extend past the 1272 of X to A, which is going to be down here. So our potential reversal zone is valid. So here we have quite a broad zone. Depending on your ratios, this zone will vary in width, length, height, whatever you want to call that. So it could be quite wide, so you're looking for reversal within a wide zone, or it could be quite tight. All the ratios form quite neatly around each other. In this instance, our 113 is quite a distance away from the other two levels. But that's okay, just gives us more breathing space for the market to move and input our entry reasons. So if I just draw this on neatly here quickly. So this is our alternative back pattern. That's what our alternative back pattern is going to look like. Similar XA, A to B, B to C ratios as the normal back pattern, except the D point is now extended beyond X. And this is our potential reversal zone. So price, technically the pattern is not completed. This is the same for all harmonic patterns. Technically the pattern is not completed until price exceeds the price extreme in our PRZ. So price can hit these two levels, but until price either hits or exceeds this final level of the PRZ, the pattern is technically not completed. However, depending on your entry reasons and how conservative you are, This PRZ is a PRZ for a reason, a potential reversal zone for a reason. So if you see reason for entry within this zone, then it's up to you, obviously, based on your back testing. But conventionally, you should enter based on entry reasons within this potential reversal zone. However, like I said, technically the pattern's not completed until it's exceeded all 3 points of the PRZ. Now, stop loss levels, 130.2 extension of X to A. So let's just put this in quickly. So we've got all of our levels in. X to A. Get rid of that. We want the 130.2. So this is our stop loss here. Now, whilst we've got our stop loss on, it's worth mentioning that, as I said before, the green box there is the potential reversal zone. However, like I said, the pattern's technically not complete until it exceeds its D point. Now, if you're a more conservative trader, if price has moved down into this box here, obviously with the harmonic patterns, you're looking for a reversal rather than with the advanced patterns, you're setting limit orders at the D point. So already you're slightly more conservative trading these patterns over the advanced patterns. However, you could be even more conservative and say, okay, I'm going to wait for the D point to be exceeded, so the pattern has now technically been validated, and then we're going to wait until price gets into this region before we look for entry reasons. So we've got this entire region now to look for entry reasons, because price could keep going lower and lower and lower and lower, and it might put in something like this, a double bottom with an engulfing candle here. If you don't know what that is, check out my website for an explanation of that, engulfing candles. But that could be your entry reason, double bottom engulfing candle on the second touch of that level. And then you're looking for a reversal to the upside there. Now, this is obviously going to increase your risk to reward, because your stop loss is only going to be this. So it's just, for example, 15 pips now, rather than if you're looking for entry reason within the original green box here. Let me get rid of this. So if you're looking for entry reasons within the original green box here, you might get an entry candle within here. So your stop loss is now 40 pips. See that at the bottom, 41.3. Now your stop loss is that big. So you've minimized your stop loss, which is increasing your risk to reward ratio. Speaking of risk to reward ratio, let's put in our targets now. So the targets are, again, conventional, 382 and 618 of the A to D point. 382, A to D, sorry. 382 and 618 of A to D. So you're looking at price to enter this level and reverse up to target 1, 382, and target 2, 618 of that A to D leg. Once price hits the 382 level, that's our profit target 1, we'll close half of the position and move our stop loss level up to break even. So now we've exited half of our position, so we've taken half of the profits off of the table. We're now in a risk-free trade, because if price moves lower, it's going to cut us out at 0. So we've only taken the profits out on this trade and we've been cut out at 0. So we've only up on this trade now. We can't lose any money. If it doesn't reverse, it will only keep going to hit our second targets. Hope that makes sense. So we're either going to make more money or be cut out at whatever profit we've taken at this level here. Hope that makes sense. Now, obviously, if you get your reversal in this point here, your entry reason, and price continues to move lower, you need to re-stretch your Fibonacci retracement tool down with the price extreme. So you could get an entry reason if you're looking for entry within the PRZ. You could even get an entry reason within the top end of this. So you could be entering here and then basing your targets on that entry. So you're looking at 382 to land about here at the top of this arrow. If price continues to move lower, you need to stretch your Fibonacci retracement tool along with the price. If price moves lower and lower and lower and lower and lower before finally reversing, your 382 targets are no longer up here. Okay, they need to be brought back down to a 382 of the whole price swing. Okay, because price has moved lower. So your 382 targets, your first targets, are now going to be down here. That's very important that you remember to do that as price moves lower. If you've already entered the trade, you need to drag your Fibonacci retracement tool along with the price. I hope that makes sense, guys. That's the alternative BAT harmonic pattern. Like I said, all of these patterns are available, all of the details on all of them are available on my website, alongside all of these video explanations of the patterns. Picture paint, that's 1,000 words of video, obviously you can tenfold that. So I hope it was informative. I hope you enjoyed the video. I hope it's helped you guys with your trading. All of these patterns are identified by OT software, so check that out as well. It's all completely objective and saves you having to look for all of these ratios and targets, stop losses, whatever. Saves you having to look all of those. It automatically prints them on the market. So yeah, I hope you enjoyed the video. Thank you very much for watching. I'll see you in the next one. Ta-da.